So you have over 200,000 clients of companies where you provide professional services and accounting and consulting services. So what sort of information do you have access to, and what is the outlook or insights that you get away from that?
Yeah, no, it's a great question, and we do have tremendous access across all sectors, and given the breadth of the services that we deliver to the marketplace, we've got great insights into how companies are structuring their capital strategies for the year around M&A activities and other capital deployment initiatives, investments, supply chain and manufacturing facilities and the like. We also have a good sense of the risks associated with credit loss, for example, given the work that we do from an audit perspective, and really how companies are processing the changes related to tax reform, including not just complying with the new regs, but also anticipating the business implications of those regs. And what I would say, Sarah, is actually the business fundamentals really do continue to be strong, and that's what we're hearing from our clients. It's certainly what we're seeing in our own business, and I'd share with you that we tend to be a bit of a leading indicator in that our pipeline is indicative of the confidence companies have in investing in their future. And our pipeline would suggest that there is a lot of optimism in the economy, and the business fundamentals do remain very strong, notwithstanding some of the geopolitical headwinds that everybody's trying to navigate right now.
And the China-U.S. trade tensions, how does that impact U.S. industries?
Well, it varies by industry. There are certain industries that are much more heavily indexed, or their businesses are much more tightly connected to the trade relationships with China. I think everybody is looking for there to be some productive dialogue, but I also think that there's a practical recognition that there's a significant amount of structural change that would be required to really achieve the objectives of both parties, and I think it's going to take time to work through that. So I think that there's a level of optimism, especially I'd say in the last week or two, but it's obviously very dynamic. Next week we could have a different news report, and it could reverse course. But I think on balance, companies continue to believe that over the long term, the relationship that the U.S. has with China is essential to both economies, and we've got to find a way forward.
And what is the industries that are most impacted by it right now?
I would say more the technology companies, consumer products companies as well. To some extent, the automotive and industrial companies have some interplay that has implications as well. So it's relatively broad-based, but I would say within those sectors, it's also narrow within those sectors in terms of the companies and their supply chain footprint and how much of that is present in China.
And what are CEOs and executives most concerned about right now?
Geopolitical risk.
Yeah.
Absolutely. I think that the concern, again, the economic fundamentals are strong. Unemployment is an all-time low. Wage growth continues to strengthen. As I said, deal pipeline is very strong, so the M&A optimism is absolutely there. But the concern and really the governor on decisions and actions in support of that optimism and those growth ambitions is the uncertainty from a geopolitical perspective, both in the U.S. in connection with the government shutdown and how long that will last, and the risk that it actually causes companies to start to pull back on their spending and starts to shake consumer confidence, which is also at an all-time high. If that starts to weaken and companies as well pull back on their investment and their spending, we could talk ourselves into a recession. And obviously overseas, there's Brexit, the uncertainty associated with Brexit. There's elections in India. There's Italy. There are a lot of geopolitical headwinds that I think are raising concerns in the minds of and in the boardrooms of companies and CEOs. And
with unemployment at an all-time low, what are companies needing to do to attract top talent and the right kind of skills?
It's a great question. It's a great question. I think it's the culture. People need to be able to see themselves within the culture. They've got to have shared values. They've got to believe in the purpose of the organization. And you've got to be really articulate as an organization about what your purpose is, what the value proposition is, how you will fit within our organization. And I think that's really become paramount for employers in a very competitive job market. I think the ability to retool and retrain is also an essential value proposition that needs to be conveyed to employees, given how dynamic the skills required are. And we think about areas of growth that our clients are experiencing, and certainly we're experiencing, are all very connected to the digital economy, very connected to technology, and you cannot find the talent out in the marketplace that possesses those skills in sufficient demand to meet, in sufficient quantity to meet the demands that you have. So you've got to be able to retrain and retool your people. It's a business imperative, and I would argue it's also a moral imperative.
And do you have any tips for leadership in these uncertain times?
Well, I would say start with your people. You know, I do think that an engaged workforce where people feel safe, they feel connected, they feel driven by the mission, are going to produce on a higher level, right? You'll get greater employee productivity and lower turnover, and in a scarce job market as we're seeing, that's critically important. I also think it's important to be agile and to be anticipating what the implications of some of these geopolitical risks really are. What are the scenarios that could play out, and how do you plan for that? There's certainly talk of recession. Again, I think most of the CEOs that I talk to, most of the people I've frankly been talking to here at Davos, don't see that in the near-term horizon. But of course, it's cyclical, and on some level, it is predictable. In the next year, 2 years, maybe 3, if we're really lucky, there will be a recession. And so starting to plan for that today is important, so you've got the ability to execute on a playbook as opposed to triage and respond in a crisis.